Good morning, ladies and gentlemen. My name is Vasil Dikov. I'm a Senior Account Manager with GDMFX, and I'll be bringing you today's market outlook. We'll start with the North American markets and the events from there. We had the industrial production on a monthly basis 0.2% weaker than expected at minus 0.4%. Capacity utilization for the month 0.3%. Worse than expected at 74.9. The Fed interest rate decision and monthly policy statement, no change in interest rate. They were dovish, basically outruling a July hike. Yellen said that some of the forces holding down interest rate may be long-lasting and secular. The FOMC Economic Projections 2016 downgraded to 2% from 2.2. In the March projection, 2017 growth downgraded to 2% from 2.1. It's officially a 2% economy, and the Fed has a history of overestimating. Unemployment forecast for 2017 and 2016 unchanged. There was some speculation that the 2016 forecast of 4.7 would be lowered because we were already there. 2016 PCE inflation raised to 1.4 from 1.2, but 2017 and 2018 were unchanged. There is likely due to the rebound in commodity prices. Long-run Fed funds rate estimated 3% versus 3.25 in March. Bank of Canada Governor Poloz speech, the Canadian economy is making progress in adjusting to low oil prices and recovering from the global financial crisis. While the energy industry continues to struggle, there are signs of strength in non-energy exports. Even though the data have been volatile in recent months, Governor Poloz said, the past depreciation of the Canadian dollar is supporting exports, including tourism, Governor added. The Dow sideways movement from yesterday, 7 points down today. Nasdaq sideways as well, 19 points down today. Dixie was up to 94.32 from 94.92. The USD versus the loonie was 50 pips up. The USD versus the Swiss 25 pips down. The USD versus the Japanese yen 150 pips down. Today we're going to have the initial jobless claims, CPI for the year, CPI excluding fuel and energy monthly and yearly, CPI monthly, CPI non-seasonally adjusted monthly, CPI core seasonally adjusted, the Philadelphia Fed Manufacturing Survey, and the NAHB Housing Market Index. Moving on to the European markets, we had the European trade balance non-seasonally adjusted 27.5 billion euro, trade balance seasonally adjusted from Europe 28 billion euro. The euro was 49 pips up versus the US dollar, 135 pips up versus the Kiwi, and 120 pips up versus the loonie. Moving on to the UK, we had the climate count change 4,000, better than expected at 0.4 thousand. Climate count rate 2.2%, unchanged. ILO unemployment rate 0.1%, better than expected at 5%. We had the average earnings including bonus 0.3%, better than expected at 2%. Average earnings excluding bonus 0.2%, better than expected at 2.3%. With all eyes on next week's referendum, investors have rushed to protect their assets in the case of a probable Brexit. Hedging campaign options in the case of a Brexit have skyrocketed after 5 polls showed that the Brexit is a real probability. Despite the fact that major financial analysts are quite skeptical over the possibility of an actual Brexit, the media hysteria has resulted in an overall 4% drop versus the dollar for 2016. The FTSE 100 is up with 16 points, closed at 5,950 yesterday. Pound versus the yen, 51 pips up yesterday, 232 pips down today. Pound versus the loonie, 170 pips up yesterday. Pound versus the Kiwi, 153 pips down yesterday. Today we're going to have the retail sales monthly and yearly, retail sales excluding fuel monthly and yearly, and the Super Thursday we're going to see how the Bank of England is going to assess the dangers of the probable Brexit. In Asia, the Bank of Japan interest rate decision was unchanged at minus 0.1%. The monetary policy statement, the policy remains unchanged as well from the Bank of Japan. The foreign bond investments, 27.8 billion yen, less than the previous at 867.8 billion yen. Foreign investments in Japanese stocks, 225 billion yen, more than the previous at 128.3 billion yen. Asian stocks turned lower on Thursday, and the yen surged after the Bank of Japan refrained from taking further stimulus steps, hours after the Federal Reserve on review has stuck a cautious note in the policy outlook. China's yuan was steady against the dollar on Thursday after late trade-driven solid gains the previous day when the market has wagered the US Federal Reserve would adopt a cautious stance towards raising interest rates. The Nikkei 225, 68 points up yesterday, 446 down today. In the Pacific, the New Zealand GDP on a quarterly basis 0.2% better than expected at 0.7%. GDP on a yearly basis 0.2% better than expected at 2.8%. Australia employment change 2.9 thousand better than expected to 17.1 thousand. Unemployment wasn't changed at 5.7%, which meets the expectations. Participation rate 0.1% weaker than expected at 64.8%. As previous. New Zealand Central Bank left the benchmark interest rate unchanged for a second straight meeting, saying it expects inflation to accelerate and it is worried about the resurgence in house prices. The currency surged to a 12-month high. Royal Bank of Australia Assistant Governor Kent said over the phone earlier that the inflation target has a degree of flexibility and the risk of lower target is if we see lower inflation expectations. He noted that there is no need to make adjustments to inflation targets right now. Low interest rates and low Aussie help the economy rebalancing and that the current monetary policy is quite stimulative. The New Zealand dollar spiked with more than 60 pips versus the major rival after the positive GDP. The commodity section of the market, crude oil stock exchange inventories decreased by 0.9 million barrels for the week ending on June the 10th at 531.5 million barrels. US crude oil inventories are at historically high levels for this time of year. Crude oil slumped to a 3-week low Wednesday after the Energy Information Administration defeated expectations with a lower than expected stockpile draw last week. Oil prices held weaker in Asia as the US Department of Energy showed weaker drop in stockpiles than expected in the market, viewed remaining from the Fed's downbeat from demanded prospects. Gold touched 1 point out, and the S&P 500 index had a range of 17 points down to 2,063 right now. Gold had a range of $18 at 1,301 right now. Silver had a range of 27 cents at $17.74. Crude oil had a $1.40 range down to 47.51. Natural gas is trading at 2.56 at the moment with a range of 5 cents. Thursday we're going to have the natural gas storage change, and on Friday the Baker Hughes oil recount. Thank you very much and have a nice day.